Welcome to the Alternative Investor. Frantic trading and surging prices for natural resources from copper and iron ore to soybeans had markets abuzz with talk that the pandemic bounce back might trigger another supercycle for global commodities. So today we figured we should unpack the idea for commodity supercycle and also see if there's any investment opportunities during a supercycle. To do that, we're joined by Peter Major from Mergence Corporate Solutions. Peter, thank you so much for your time this afternoon. Let's start off by unpacking what a supercycle is.
Well, supercycle is what people want it to be. But I agree when people say we're in a supercycle now, because I'm seeing prices that we've never seen really in the history of man. And the longer the graph you look at goes back, the more extreme the current prices look. And if we start with one of the most popular commodities, gold. Man has traded gold for thousands of years. And if you try and work out what the price was minus inflation, most of those years in the 2000, 3000, gold was about $550 an ounce. Yet today, gold's trading at $1,900 an ounce. And what's different, it didn't just shoot up to 1900 and then go back like it did back in 1980, like it did back in 2011 and 12. This time it's shot up to 2000. It came back a little bit, but it's gone right back to 1900. And we've got other prices similar. Iron ore. Iron ore was trading just recently, like a week ago, $220 a ton. And I think the long-term price of iron ore isn't even $60. So that means it's trading at 3 and 4 times its price. So we've had strong metal prices beginning in 2003, and we still have them now, in many cases, stronger than ever. So I would say this is an 18-year, 17-year cycle, and it's the highest prices we've ever seen. If that's not a super cycle, then what is?
So you were talking about gold and iron ore. Are you seeing the same things with platinum? We'll put up the platinum chart in a few seconds.
We're seeing even crazier things with the platinum group metals. When you mine platinum ore, generally you get 6 different platinum group metals, and they're all related. It's like a family. You can say platinum's the dad, palladium's the mom, rhodium's the oldest brother, and then there's 3 others. Now, platinum, funny enough, has gone up the least of the platinum group metals, but rhodium, the highest we've ever seen rhodium before. 2 or 3 times in the history of man, rhodium hit $10,000 an ounce in real terms. Now we saw rhodium go to $29,500 an ounce. So when something goes at 3 times the highest price we've ever seen in the history of man. Palladium, very similar story. The highest we ever saw palladium, I think, in the history of man, 2,000 years, was maybe $1,000 an ounce back in about 2000. And now we see palladium's gone to 2,950, 2,900. So, yeah, the platinum group metals, rhodium, iridium, palladium, those 3 have gone multiples of what we've seen go before. Platinum is actually very subdued. It's trading just a little above its long-term average. It's trading at about $1,200 an ounce, and I think its long-term average is maybe about $1,100 an ounce. So, funny enough, platinum has behaved pretty normal in this cycle, but boy, its sister elements have behaved very, very wild.
So it's behaved normally, sister elements behaving a little bit wild. But I'm curious about the oil price at this point, because this week, I think on Tuesday, we had the OPEC Plus meeting, which we were talking about quite in-depthly in the markets. Are there similar elements and themes going on there as well? We've got the chart on screen right now.
It's pretty amazing that the world's gone anti-carbon in a big way the last few years. And boy, oil and coal and even natural gas, they reacted to that. So about a year ago, those are the 3 biggest contributors to carbon pollution on the planet. and they fell. Oil fell down to $30, even $20 momentarily for a few days, maybe a week or two. Natural gas fell to levels we've never seen it. And coal fell to very low levels. And coal is public enemy number one by far, but oil's right behind it, and followed by natural gas. And yes, here all three of those have corrected, and they're above their long-term averages. Now, they're not at crazy levels, oil pushing 70, but if its long-term price is 50, and that's going back 150 years, so if its average price is $50 a barrel and it's trading at 70, you got to say, what's going on? And we have organizations like OPEC, and we have huge oil producers, and they're cognizant of these prices and the mood of the public against them, the mood of the legislators against them, and the politicians. So they want to make the best of a difficult situation. They know they're slowly being phased out, probably like cigarette manufacturers, but they know they can last at least another 10, 20 years. So let's get as high a return on our assets as we can. Let's restrict production a little bit. But the world is growing so strong now, they don't have to restrict production very much.
Yeah.
And so you're seeing steam coal back to $100 a ton, oil back to $70 a barrel.
So
it might be temporary, but they're making money now.
Yeah, so to interrupt you, for our viewers who might be wondering, why does a super cycle even matter, and are there even investment opportunities? I mean, what would you say to that?
There's big investment opportunities in a super cycle, but the investors who made the most money, they had already made their investment before these prices went mad. But you can still make money even when the prices are crazy, because you can sell things that are related to those prices, because it's very, very unlikely these kind of prices are not going to last. So if you've got an investment or an asset that's related to crazy prices, now's a good time to sell it, because you're going to get a higher price for that asset than you've ever got before. And we saw Anglo-American bragging up at the start of the super cycle in 2008. They were selling coal mines for 2 and 3 times what they paid for them 5-6 years before. So yes, if you've got an investment related to these, you would probably want to sell it now. It's too late to buy it, in my view, because you're buying something that's already had a big run, and there's a lot of people who benefited from the run that are looking to get out of it, and you don't want to be the sucker getting into it when the wise investor who got in early is getting out.
All right, Peter, it's been a really great conversation with you, and I'm looking forward to having you back on the show, and perhaps we can expand the conversation even further, where we look at other alternative investment opportunities that may have been overlooked, and also keep track on this and see if it really is going to go as far as it has been going for a while now. But thank you so much for your time. That is Peter Major, who is a director of mining at Mergence Corporate Solutions. At the top of the hour, we go live to Parliament, where